Hi, good morning, everyone, and welcome to KIP Real Estate Investment Trust Q2 results briefing. I'm Sandra from Image Jewel Communication, the IR and PR consultant for KIP REIT, and I shall be a presenter and moderator for today's briefing. Today's results briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagements with the investment community. For the first phase of the project, Image Jewel Communications has been appointed as a third-party IR company to train and educate participating PLCs to conduct effective IR engagements. The selected companies for this program are PLCs that are less accessible to analysts and investors, but are highly in demand based on the feedback received from the investment community. We wish to thank KIP REIT for participating in this project. The recording of the investor briefing and presentation slides will be made available for all on Bursa Malaysia Institutional Insights portal after the event. Today, we have with us Mr. Alex Chew, ED of KIP REIT, Ms. Hee Wei Bing, the CFO, and Ms. Natalie Ong from the Legal and IR Department. On behalf of KIP REIT, please allow me to go through the results presentation deck, starting from the financial key highlights for the second quarter FY 2022. In the quarter under review, gross revenue was achieved at 18.5 million, marginally down by 0.6% as compared to a year ago. Notwithstanding the lower revenue achieved during the quarter, net property income was up by 3.5% to 14.4 million, while realized profit after tax was 9.1 million, up 4.5%. Correspondingly, income available for distribution increased 2.2% at 9.6 million. The management had proposed a second interim income distribution to unit holders of 7.83 million or 1.55 cents per unit, which includes a non-taxable portion of approximately 0.71 cents per unit, derived from capital allowances and tax-exempt income, which is not subjected to tax. The total distribution declared for the four quarters from 1st January 2021 to 31st December 2021 stood at 6.8 cents, translating to an annualized distribution yield of 8%, based on the closing share price of 85 cents as of yesterday. The average occupancy rate for the 3 months period from October to December 2021 was down by 1.5% point year-on-year to 87.5% across the 7 asset portfolios. Given the supplemental trust deed registered with SC back in October 2020, KIP REIT is now able to invest in assets directly or indirectly in income-producing real estate used for industrial or commercial purposes, including warehousing facilities, logistic facilities, and manufacturing sites. As stated, KIP REIT saw its gross revenue slip marginally by 0.6% from 18.6 million a year ago to 18.5 million. The decrease was mainly due to lower promotional area income despite the easing of the SOPs and a slight decline in the average occupancy rate, namely from KIP Mall Bangi. Nevertheless, this was mitigated by the higher revenue from contracts with customers as a result of higher forfeiture of deposit and late payment interest received in this quarter. Net property income rose 3.5% from 13.9 million to 14.4 million, driven by better cost management measures, resulting to lower expenses such as utilities, maintenance and housekeeping, marketing, reimbursement costs, and other operating expenses. Accordingly, realized profit after tax also increased by 4.5% to 9.1 million from 8.7 million a year ago. In view of the higher realized PAT and NPI, the reported distributable for this quarter was 9.6 million. The manager has proposed a second interim distribution per unit of 1.55 cents for the second quarter FY 2022, bringing a total distribution of 6.8 cents per unit for the last trailing 12 months period. KIP REIT has consistently delivered attractive annual yield to its unit holders. With a closing share price of 85 cents as at 19 January 2022, KIP's annual yield was 8%, which is way higher than the dividend yield from ETF, a 5-year FD rate, and a 10-year NGS. Its dividend yield was also higher as compared to the peers' average annual dividend yield of 4.68%. The group's balance sheet remains healthy with total assets of 845.2 million, including investment properties, which are valued at 808.3 million, cash and bank balances of 28.1 million, and other assets amounted to 8.7 million. Total liabilities stood at 332.8 million, with total borrowings of 312.9 million, giving a gearing ratio of 37%. Net asset value per unit was 1 ringgit on the back of the net asset value after income distribution of 512.4 million. KIP maintains its ongoing capital risk management with 68% of its borrowings based on fixed rate and the balance 32% based on floating rate. This basically gives KIP a natural hedge against the movement in interest rates, in addition to giving a 68% certainty in its borrowing costs. In terms of its MTN loan, the next refinancing of both the rated and unrated MTN loan totaling to 310 million are due on 31st July 2024. Moving on is a summary of KIP's assets portfolio, where the current market value of the six KIP malls and Aeon Mall Kinta City are valued at 808.3 million, with total lettable area of 1.48 million square feet. As at 31st December 2021, KIP has a total of 747 tenants with an average occupancy rate of 87.5%. KIP promotes themselves as neighborhood community-centric malls. Geographically, they are situated at the southern region in Johor, namely Tampoi, Masai, and Kota Tinggi. In the central region, the malls are situated at Melaka, Bangi in Selangor, and Senawang in Negeri Sembilan. The northern region, on the other hand, only consists of the Aeon Mall Kinta City in Perak. The next slide. The next slide here is the average occupancy rate for each KIP malls. In contrast to the last quarter, the occupancy rate has improved by 0.5% to 87.5% this quarter. All the malls have demonstrated a better occupancy rate, with the exception of KIP Mall Bangi, due to the preparation for the facelift project, which is due to start in March this year. On the lease expiry, the number of leases expiring in FY 2022 are 265, with the area size of 140,123 square feet. In terms of occupied net lettable area and gross rental income, 10.7% and 17.1% will expire in FY 2022 respectively. The weighted average lease expiry as at 31st December 2021 stood at 3.33 years based on occupied net lettable area and 2.85 years by gross rental income. Here, the management would like to give an update on their operations as a result of COVID-19. Operationally, KIP will continue to comply with all the mandated SOPs, such as regular sanitization and housekeeping, to maintain shoppers' confidence. KIP is also following up closely with rental areas through ongoing communication with their tenants. Fiscal prudence and credit control measures are also being implemented. Above all, cost and capital management remains as KIP's priority to continue as a going concern while maintaining greater value to its unit holders. For the quarter, KIP has reduced its maintenance and housekeeping expenses due to lower headcount and better negotiated outsourced security services. Marketing expenses was also lower, driven by better marketing planning. Gearing ratio remains stable at 37%, which is way below the permissible limit of 60%, with the next refinancing is only due in July 2024. Moving on, the Malaysian economy is projected to expand by 5.8% in 2022 due to the acceleration in private consumption. However, the economy remains clouded due to the latest variant Omicron, despite more than 40% of the adult population received their booster shot. As of to date, a total of 8 stimulus packages worth 530 million has been provided, and the Malaysian economy is expected to rebound in 2022 as activities in the manufacturing, services, and agriculture sectors have gradually picked up. The Retail Group Malaysia, on the other hand, has projected 6% growth in the retail sales for 2022. Going forward, to cushion the impact on the pandemic, KIP will continue to remain vigilant on their cash flow management and continue to cater for its surrounding communities. All SOPs will be complied strictly, and appropriate strategies will be implemented to ensure the group's long-term sustainability. Sorry, Emil, a private placement exercise was also announced on the 13th August of last year to raise approximately 80.8 million to fund any future yield accretive assets acquisitions. Therefore, with the new investment policy, KIP intends to widen its asset portfolios to invest in income-producing real estate assets, especially in the logistic and warehousing facilities. As part of the deck, we have incorporated more detailed information for each of the 7 respective asset portfolios, being Tampoi, Kota Tinggi, Masai, Senawang, Melaka, Bangi, and Aeon Mall Kintas City. And with this brings the end of my presentation. We now open the floor for Q&A session. You can either ask your questions verbally or have your questions typed out in the chat box. Thank you.
Hello, hi.
Hey, Chuhan.
Hey, hi. I hope you can hear me clearly.
Yes, we can hear you.
Okay, a couple of questions. Thanks for the presentation. Number one is actually COVID, what we have learned from COVID-19. Obviously, you are actually going to look at the logistics and the warehousing sector or assets much more closely. I presume that is something that is more on the management's agenda rather than expanding on the retail end. Correct me if I'm wrong. Number one, and number two is that in terms of the occupancy rate, what are the plans to boost the occupancy rate at the Tampoi Mall, considering that it's below 80%? And my last question is very much on the leases that are expiring this year and next year. Much more this year because it's just, I think it's about 10%. Is that like, is it towards a particular mall for this 10% that brings it down to an average of 10%, or is it like 10+% or in the teens for across the asset base? Thanks.
Hello, yeah, we've been here. Okay, let me take the questions. So I think question number one, yes, that is our directions that we want to go into. Beside the retails, we also consider the commercial, which is warehouse, logistic, or even if let's say it's a good quality manufacturing site. Number two, the occupancy rate for the Tampoi. I think Tampoi has experienced a drop in the occupancy rate. One of the key reasons, beside the last quarter we mentioned the early termination for certain smaller tenants. Also 5% plus of the net lettable area was vacated to cater for the incoming mini anchor tenants, which I think last quarter we also has mentioned that there is Jalan Japan. So the site now is under the constructions and scheduled to complete by end of March, and JJJ should be on board last quarter of financial year. So we will foresee that the occupancy rate will improve maybe beginning of next financial year. And for the lease expiring, the total, if we look at the annual report, I think the total of the 260, as of now, 265 number of tenants expiring in June this year, and it's actually spread across all the mall. It is not concentrated in one particular mall.
Okay, thank you.
Hi, Wei Bing. Wei Bing, we have a question from Shen Rong from UOB. Most of KIP REITs have Mr. DIY or Mr. DIY types of shops. How is Mr. DIY doing? How are their sales per store?
We do not keep track of our tenants' sales because we do not have a POS that is linked. But I believe that they are doing okay, because in terms of the footfall, I think it is quite good.
Thanks, Wei Bing.
Hi, good morning. This is Isaac from Affin Kwang. I'd like to ask questions, please.
Yeah, sure.
Sure. I'd like to know in terms of the rental revisions, how is it looking like? I mean, we have a scenario where on one hand we have people are the tenants are still recovering from the COVID-19's pain, and on the other we have a runaway inflation rates and rising interest rate, all those things take into considerations. How should we expect the rental reversion trend for this year and maybe for next year? Thank you.
We expect the rental reversion for this year should remain flat. For next year, we also foresee that it may improve a little bit, but it may not be very much. It depends on the tenancy renewals timing. And in the past, okay, maybe just a flavor that as of now, for those tenancy expired and renewed, we have a 2.77% of the reversion rate.
Okay, thank you. All right, maybe I would like to ask the questions on the plan to diversify into the warehouse, logistics, or even manufacturing. So in terms of the management expertise, how do you think that the KIP REIT, how is KIP REIT going to add value to all these assets that you are acquiring? I mean, can you share with us in terms of the management experience? Do you have a long track record, a profile that you have built over the years? Because otherwise, if you, I mean, just like, yeah, I would just like to know how can KIP REIT add value, or you're just gonna play along with the market?
In terms of the expertise, I think we all know that in the past, KIP REIT has been retail focused. But moving forward, if let's say we explore any of the acquisition, which is the commercial, like warehouse, logistic, or even the manufacturing, our target will be the master lease, the full master lease, and we will have our property managers, which is licensed, to assist us to manage those.
Okay, thank you.
We have a question from Shafika from EPF. What are your plans to retain tenants in the long term other than placing short-term tenancy?
We have, okay, maybe in terms of that, the reason why we structure our terms, our tenancy terms, not on the long term like 3+3+3. It is basically to better manage the situations, like a lot of those uncertainties, etc. And at the same time, also to tag with the economy. If let's say it is good, then we are able to increase the rental. But so far, we have almost 60% of the tenants who has renewed more than one times of the tenancy. And they have joined KIP more even before the IPO. So they have been there for a long time.
Thanks, Wei Bing. Another question from Shafika. Are you foreseeing another rental rebate this year?
No, we do not foresee that there will be another round of the rental rebate.
Thank you.
This is Isaac here again. Maybe we can just want to hear a little bit about how's the e-commerce, food delivery, and all the proliferations of such services affecting management strategy, or like management strategies, or if possible, the renters and space configuration maybe. How has that affect KIP REIT?
So far, based on our past experience, I mean, 2 to 3 years ago, when everybody is talking about the e-commerce, we do not see the very significant impact on our tenants or our mall. Even for some of the, I think from the report, we can see that the bigger retailers also mentioned that the e-commerce is contributing a very minimal percentage to their overall sales. But at our mall, we actually have provide the facilities like, for example, the pickup, the deliveries, etc.
All right, so noted, no major material implication. Thank you.
No.
We have another question from Shafika. Will dividend payout reach 100% again in FY 2022 onwards?
No, our policy is to distribute at least 90%, and we will ensure that we will distribute that on the full year basis.
Thank you. Are there any other questions? If there are none, we will end the session for today. Please feel free to reach out to us at Image Jewel Communications should you have any follow-up questions. On behalf of KIP REIT and Bursa Malaysia, thank you all for attending today's briefing. Do stay safe. Bye.
Thank you, everyone. Bye.
Thank you.
Thank you.